Markets across Asia were mixed and fell by the close on Wednesday as risks of a no-deal Brexit re-emerged after UK Prime Minister Boris Johnson said that he will amend the Brexit bill, ruling out any extension to the transition period beyond December 2020. In China, the Shanghai Composite was down 0.18%. Hong Kong's Hang Seng Index declined 0.12%, Japan's Nikkei 225 lost 0.55%, and over in South Korea, the Kospi declined 0.25%. Australia's S&P ASX 200 closed nearly flat at 6,851.40. Overall, the MSCI's broadest index of Asia-Pacific shares outside Japan was flat. On the data front, Japan's exports declined 7.9% in November from a year earlier, falling for the 12th straight month. At the same time, it still beat a forecast of an 8.6% drop and was better than the 9.2% decline in the previous month. Imports were worse than expected, falling 15.7% against an estimated 12.7%. In Europe, stocks closed mixed on Brexit-related worries. Meanwhile, it was reported that the Trump administration is finalizing a set of narrow rules limiting exports of sophisticated technology to China and other adversaries. In corporate news, Fiat Chrysler and Peugeot owner PSA confirmed a binding agreement over a $50 billion merger to form the world's fourth largest automaker. Volvo shares rose 3% after the Swedish automaker announced a strategic alliance with Japan's Isuzu Motors. As for the data, the German IFO Business Climate Survey showed that business sentiment rose more than expected in December to hit a 6-month high, easing concerns over the health of Europe's largest economy. Meanwhile, the UK inflation held steady at a 3-year low of 1.5% in November, while Eurozone inflation accelerated to 1.1% in November from 0.7% previously, helped by a string of rise in food prices. U.S. stocks declined marginally just before the closing bell as investors digested the impeachment of Donald Trump. The House of Representatives voted to impeach Donald Trump on 2 specific charges. First, he abused his power by freezing U.S. foreign aid to Ukraine to pressure Ukraine's president into launching investigations into Trump's domestic political opponents. The second article charges Trump with obstruction of Congress for demanding top-level staffers at the White House defy the lawfully issued subpoenas they received from the House Intelligence Committee. Still, market reaction was fairly muted. The S&P 500 index snapped a 5-session streak of gains. The Dow Jones Industrial Average lost about 0.1%. The Nasdaq Composite added nearly 0.1% for a record close. FedEx Corp plunged 10% after the delivery company cut its earnings targets for the 4th time this year. The company reported a 40% year-over-year decline in profit and a 3% fall in revenue. In currencies, the euro-US dollar retreated further from recent highs and found support at around 1.11. Mixed European data failed to attract the euro's attention as the stronger dollar demand set the tone for the pair. Early on Thursday, the common currency made some recovery attempts, clinging to the 1.1130 area. The pound sterling US dollar, meanwhile, extended losses to 1.3060 yesterday as traders continued to digest the threat of a no-deal Brexit. Today, the Bank of England meeting could exert additional selling pressure should the central bank express a dovish tone. If so, the pair may target the 1.30 handle. In commodities, oil prices registered fresh 3-month highs after U.S. data showed that crude inventories had dropped. According to data released by the Energy Information Administration, U.S. crude inventories dropped 1.1 million barrels in the week to December 13, while gasoline and distillate stockpiles rose. The figures came in a sharp contrast with the estimate from the API, as the report a day earlier revealed that stockpiles rose 4.7 million barrels. As such, Brent rallied to $66.40 and finished above the $66 handle, a bullish signal. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.